Oh, 3, 2, 1. Good afternoon. Welcome to the Guest Entrepreneur Series of SMC Topical Seminar. Today, I have with me a very distinguished and accomplished financial guru. He used to be my boss from 27 odd years ago, Sir Gbenga Badejo. You're welcome, sir.
Thank you very much. It's a pleasure to be here.
All right, sir. Okay, so to start, would like you to give us a bit of a background about yourself, your work experience in particular, and how you started your own business.
Thank you very much, Helen. I'm a 1984 graduate of Nigeria's premier university. No pun intended. I'm sure you all know which university is Nigeria's premier university.
I suppose University of Lagos.
That's University of Ibadan, of course. And I left in 1984, and I trained as a chartered accountant with a firm called Gbenga Badejo at that time. And I was in the accounting firm for about 6 years, learning the ropes, and it's like an apprenticeship on learning how to acquire expertise in accounting, auditing, management consulting, financial consulting. And after those 6 very, very excruciating years, I decided to go out there to try my hands on some of the things I've learned. So I picked up my jacket and joined S1U, also the budding advertising company. Integrated marketing communications is the word, not just advertising. S1U birthed around that time. So I was the first finance manager, coming from a background, a very rich background with financial consulting, management consulting. I was hired to run the finance and admin department, and I did that for about 6 years, and that's another 6 years in the life of a professional. So after 12 years, and then decided to birth GBC Professional Services, and that happened in 1991 May, and that is what I've done since 1991, running an accounting and a professional firm, a full-fledged professional firm that helps people to run their business better. We excel as a leading organization, adding value to businesses. Our pivot is everything we do, we try to add value. Anything we do it at a profit to our clients, first and foremost, and to the firm. If it profits the client, then it will profit the firm. So it's the symbiotic relationship. That's a bit of some science. I guess it has found it's a full meaning in social sciences. If it's a symbiotic relationship, once it profits the client, it profits the firm too. So our service strategy is hinged on creating value, and we try to cut a reputable specialist image. We strive to be a significant contributor to our clients' success, and that has been what has been keeping us going. Nothing short of that.
Fantastic. Can I, listening to you from your background at the consulting firm, then to a communication firm, and now to your own professional services firm, I want to know if you could share with us a bit of your experience working with creative organizations, businesses in the creative industry. How have you been able to advise them, both as a consultant and as a financial expert?
Thank you very much. The first impression, there was a culture shock in 1991 when I got into the creative industry. The culture shock emanated from the fact that you're working with a lot of people that are non-conformists. They have their heads in the clouds. They want to do what they want to do. They're having fun doing it. So sometimes they don't count the costs of what they are doing. They want to give you the best, but at what cost? They want to bend over backwards. They want to go the extra mile at what cost? So the very first thing that occurred to me is here are some extremely talented men making a living, having fun while they are making a living. But if care is not taken, you may end up at the end of the month, there's no money to pay salaries because you have spent the whole time enjoying yourself. So I became a businessman, not only a finance man. I became an administrative person. I was wearing so many caps. Became a financial person, administrative person, an accountant, an auditor, a motivator, so that you can harness people's energy, their creative prowess, and convert everything into positive energy that allows the organization to survive beyond the immediate. So everybody started focusing on long term. Everybody started focusing on beyond today. What is in it for us tomorrow? Are we going to spend the whole of today with not thinking about what the future holds? So it was a culture shock, but it became something that I had to live with. And thereafter, it became very, very interesting. Managing people that they have a lot of energy to play around with is a challenge if you don't have your wits around you.
All right, thank you very much, Sir Badejo, for that brief introduction. I like the part where you say that creative people don't count the cost. They just want to give you excellent service. They always come up with fantastic concepts. I can imagine some of the battles that you would have fought to get them to think like businesses.
Yes,
So,
it was really
so, so
interesting.
good. So talk about that. What are some of the things that people in the creative industry should be mindful of? So if you have an entrepreneur who wants to go into a business in the creative industry, whether it's marketing, communication, movie production, journalism, content creation, what are some of the advice you give them in terms of finances? So I want to start with first, in starting, where can they get funds from? What are the funding options available to them?
Now, we have to learn to do the first things first. Talent is not enough. That was what my management guru taught me, John Maxwell. Talent is not enough. You have a lot of talented people all over the place, and they are looking to go into one kind of business or the other. So, first things first, you must put your best foot forward. What you want to do, you must sit down, do some research, put together a business plan. You don't have to go consult the best consultant in town. All you need to do is sit down, be true to yourself. What are my strengths? What do I want to do? What plans do I have? Take a long-term view of this business. Put together a strategy. What is your service strategy? How do I intend to? It's like brick and mortar. Brick and mortar. What do I want to do in the first 3 months? How do I move from the first 3 months to the next 6 months? How do I move up into the second year? What will I require? So you are technically putting together a business plan in your own way so that you can identify your strengths, your weaknesses, your opportunities, and your threats. And as you are identifying all those things, you are putting pen to paper to identify what are my critical success factors. What are the challenges that I'm going to face? If you have identified your objective, if you have identified what exactly you want to do, how do you set about making success of this venture? By the time you're able to put these things together, you have a rough cut. You have something you can at least showcase to the world that you have a business plan. It doesn't have to be perfect. Now, in putting together that plan, some gaps will show up. Who do I need on this journey? what kind of financing do I need? Who do I talk to? Am I going to have to rely on friendly loans? Am I going to go and look for Helen Emore to say, come and partner with me? Am I going to go and look for at my grandfather's savings to see if the man willed anything to me? What kind of funding do I require? What kind of assets do I need to acquire? Do I need a car? Is a car a priority? So a lot of people go into businesses without thinking about all these things. And you've got to think through it and take a long-term view. So you don't wake up in year 2. You don't wake up in.
Sir, let me
Yes.
interrupt you. I know you want to go further, but I want to bring you back to some of the things you just talked about now. Listening to all these things that you are asking people to do, for young people or people who are in a hurry to start something, where would they get the time to think through, do all this analysis, right? I mean, people say that it's too much hassle. Why do you want me to go through all this? Why do they have to go through it?
If you're in a hurry to set up your business, it looks like you're in a hurry to fail. If you're in a hurry to set up your business, you may as well be in a hurry to fail. Those who fail to plan actually plan to fail. So nobody should be in a hurry. You have a whole lot of time ahead of you. The time to plan is the most critical time that you need to execute your plan. Once you've put together.
I'm losing your audio. What happened?
You need the time you spend putting together that plan is justified by the speed at which you can execute those plans. I hope you understand where I'm coming from.
Okay, I
Assume
lost
you
you
don't
for a
have.
bit now. So if you can just repeat the last sentences. I lost you
Okay.
for a few seconds.
Now, if you have a plan in place, you are better off because
Technology. Oh. I think we lost him there.
You know they go up so.
Oh. I think I've lost him completely. God.
all right.
All right. We're talking about when people fail to plan, what happens to them?
Yes, it's like wandering around in a jungle. And what happens when you wander around in a jungle? It's like you just take things as they come, and you end up wasting a lot of time, energy, and resources, which someone that is going freshly into a business needs to conserve a lot of energy, conserve a lot of funds. You have to manage your resources carefully so that you don't burn out even before you get started. So planning is key. The time you spend planning is not waste. Is not waste. But a lot of young people are impatient. Like you said, they're in a hurry. And I will say to you that they're in a hurry to fail. Simple. They're in a hurry to fail. And I said that to a couple of them. Don't be in a hurry. Although failure in itself is a way of ensuring that you learn your lessons and you're able to forge ahead, but some failures, some businesses can start on a very good note if you have done your planning, if you have gotten your planning right from the beginning. You still encounter difficulties, but you can take on those difficulties in measured steps.
Okay, so listening to you now, it means that even before you start talking about funding and financial management, you first have to have some sort of plan, whether it's a strategy, whether it's your business model. You have to have some sort of map that is going to direct
Exactly.
your business. Because
Exactly.
I hear people say a lot that funding is a major challenge. That even after they have all the plans and they've done everything, they still need money to run the business and grow the business. What do you say about that?
Funding is the least of the problem from my own point of view. Funding is the least
In
of
this
the problem.
Nigeria that we are in,
In this Nigeria, the first thing is, what is the idea? What is the idea? What is that idea that will sweep me off my feet? What is that idea that will take the market by the storm? What is that idea that is exciting? What is that idea that if I sat before a Helen Emore in a pitch, she will write me a check? What is the idea? Most of the time, people are not critical about having a well thought out, idea in their mind. What is this idea? How do you want to make money? How sustainable is this business? This business you're talking about, what is the trajectory? Where will it be in second year? Where will it be in the third year? Where will it be in the fourth year? You think because someone is running a studio, you just want to go and set up a music studio, and you don't know all it takes to set up a music studio because you think you have some skills. You need to sit down and do some serious research, do some serious work and plan. Because once you have done that, all other things can be added onto you. Once you have done that, you can either approach some financiers, you can raise equity, you can there's several sources of funding available. You can call an angel investor, you can approach an angel investor and say, these are my ideas. This is the Naira and Kobo. This is where I want to be. This is the idea that will rule the world. I am sure a couple of people will be willing to listen to you. And another thing that is very important is that there's no one way to the market, that like they say in our native parlance. You can source equity, you can source bank loan by riding on the pedigree of a good corporate governance. For instance, if you imbibe a good corporate governance and you have a board of directors, you can ride on the pedigree of some of the people in your board to secure some very, very favorable loans. You can lease some equipment. You can do creditors financing depending on the level of business you want to do. I can get, if you are setting up a studio, I can lease cameras, I can lease a mixer, I can lease some of the equipment that will enable me churn out very fantastic work. You understand what I'm saying? You don't need to have all the money. You don't need to go and break a bank, set up a business. All you need is the great idea. And I'm sure to birth a great idea is not a piece of cake. It's not a piece of cake.
Okay, Olawale, I need you to mute your video and your mic because it's coming in to the recording. Okay, so thank you very much for that information. What I want to ask now is, all things being equal, with a plan of some sorts, how should entrepreneurs look at fundraising? What kind of funds should they be raising? Because a lot of people say, oh, the banks are not giving loans. When you are starting, what kind of money should you be looking for? Where should you be looking at to raise money? And when you are going, when should you be looking at to raise money? You need a loan to start a business all the time? Or do you need other people's money to start the business? Or do you need your customers to fund your business? What should people think about strategic funding when they are starting and planning to grow their business?
Thank you very much. This is still all part of the planning process. If you are going to go into a business that has a long gestation period, what I mean by long gestation period is that when will this business break even? How much do you need to start this business? What will be my profile? What will be my customer profile? How will money trickle in? Oh, it's going to take me 2-3 years to be able to break even. What kind of funding do you need? People can go for private equity. If you're able to convince some guys that would rather, oh, what's the interest rate in the bank today? If you put a 1 million naira in the bank, maybe you'll get a 2%. If somebody brings a business model in front of me that gives me a 7% return on my 1 million, and the idea sounds great, I think a lot of Nigerians will think twice before keeping their money in a bank that gives 2% when they find a winning idea in front of them. So it's a function of your gestation period. You don't borrow short-term funds. A bank is going to give you money for 6 months, 1 year. You borrow short-term funds to finance a long-term business. You borrow short-term to finance long-term. You're already starting on a very faulty note. Your business is not going to break even in 2 years. You are borrowing money which you have to repay in 6 months. You are borrowing money which you have to repay. So you need some level of long-term funding or a combination of both. Now, if, for instance, as a media practitioner, you know that you are going to raise media order, and the media houses are not going to give you credit for 1 day. You need to prepay. Your clients are not willing to pay you upfront. So you are going to be financing your clients. You are going to be using your funds to run projects for your clients. A Procter and Gamble. Yeah, I'm going somewhere.
Yeah.
Procter and Gamble gives you an LPO and says, we are doing product launch. We're not ready to pay you until 60 days after you have executed. And you have to execute. So are you going to run to the bank? If you are going to run to the bank to do an LPO financing, you need to sit down and find out what is my return? What is the amount of money I'm going to make on this transaction? Will what the bank will be asking me as the cost of the loan, is it covered by this business? Is this business able to give me maybe a 20% return after paying the bank a 21% interest rate on the amount of money I'm going to lend? So a lot of critical thinking has to go into this. This is different from, avant-garde, you have camera, can I lease your camera? Or come and partner with me on this project. Kese, give me your rig. Tall and wide, give me your public address system. So you can actually identify partners in the industry that you can collaborate and turn this business into a joint venture. And at the end of the day, you share profit in the ratio of everybody's contribution. You're not borrowing money from anyone. Or you are relying on the expertise of people that are already established in the industry to be able to deliver. So you are not going to go and borrow money to first of all acquire equipment. You are already leveraging on the people that are already established in that business to be able to deliver clients' delight. Now, you could look for strategic investors. This is a project I have. I need you to give me some funds for a period of time. This is the Naira and Kobo. This is the profit and loss of this project. This is what is going to be your share of profit. And strategic investors, they come into a project, finance the project, and they get out upon the satisfactory completion of the project. So you are not borrowing. You are being creative in ensuring that you don't give all your money. You don't work for the bank. You don't give all your money to the bank. And then you don't go into a debt Because chances are that after 6 months, Procter and Gamble says this is going to be delayed for another 1 month. Anything could have happened. Most of the time, you don't get paid as and when you've planned that you should get paid. So in your planning, you must plan for those kind of exigencies. So the mode of financing is a function of you understanding your business terrain, understanding the nature of the business that you are going into, and knowing whether you can buy services, whether you can use creditors finance, and if you need to borrow, maybe you need to borrow minimally so that at the end of the day, you are not wiped out. So you must be able to identify all the odds against you.
So listening to you now, what I take
Yes.
away from what you just explained now is that for you to even have a financing strategy, you need to
Yes.
understand how your business runs properly.
Yes.
So you need to know the
Yes.
entire dimension of the business. You need to know that sometimes clients will not pay. You need to
Yes.
know that sometimes things will not go as planned. You need to
Yes.
know you have other options within your network. And
Yes.
again, that magic word, collaboration, is key.
Yes.
Sometimes collaboration will save you a lot of energy and
Yes.
resources. So really, finance is not a standalone. It is an integral part of the structure of the business, of the
Yes.
way you model your business. Because
Yes.
it would appear to me, having dealt with a lot of small business owners, it would appear to me that most small business owners, they don't see finance as a strategic component of the business. They think that after I've done everything, then I'll think about how to finance it. And then they just start looking for cash. So this what you said now shows that as a business owner, you have to have a very, very strong strategy, and finance is linked to the main operation. That's what I hear
Exactly.
from you
Exactly.
now. And that
Exactly.
brings me to the next issue that comes up: structuring and record keeping. Structuring and record keeping. It is alleged that most small business owners are very informal, especially in the creative industries. They don't even have formal structures or systems running. What do you have to say to someone in the creative industry about structuring their records and their finances?
Now, that's also a very critical one because if you don't keep good records, you cannot backtrack your business, you cannot project, you cannot, it's like trying to build a structure, build an edifice, and you don't have good foundation. Now, keeping records starts from even when you are conceptualizing that big idea, that idea. When you are doing your research, everything must be documented. That's part of record keeping. You must document all your assumptions. And as you go on, you validate some of these assumptions every step of the way. You cannot validate what you have not written down or what you have not conceptualized, well conceptualized. Validating assumption is a very critical part of record keeping. You can't keep assumptions in your head and you say you are validating what's in your head. If you sit before a third party, how and you don't present your assumptions in black and white, what are you validating? You wake up tomorrow, the assumption changes. So you are just, the breeze is just blowing you all over the place. So record keeping starts from that. You keep records of all your preliminary expenses. Because someday you are going to be asking yourself a question: how much is my sweat worth? A lot of people talk about sweat equity, but they don't do everything that will enable them determine what their sweat equity is. They invest time, money, energy into a business, but they don't keep records of it. They don't keep records of it. So, what are your preliminary expenses? Keep minute details of your preliminary expenses. All your business expenses must be receipted. You have a car, you are running around doing research, you are buying fuel, you are not picking up your receipts, your POS receipts, you throw them in the bin, or you don't even take it. So how do you, at the end of the month, determine how much you have spent on fueling your car all around for this same business purpose. The business has not even started, but you have started keeping records of all your expenditure. It helps to be able to put a lot of things together, all your preliminary expenses, that saying to yourself, oh, I've spent 1 million naira doing nonsense. I spent 1 million naira and I'm still scratching the surface.
Yes.
It helps whip people to line. Now, all business expenses must be receipted and kept in such a way that a third party can look at it and say that, oh, this expenditure has been wholly, reasonably, and exclusively incurred for the purpose of starting a business. Those three words are key: wholly, reasonably, and exclusively incurred for the purposes of starting a business. Now, what is going to be your personnel expenses? Do you document it? Do you just pay people salaries from the back of your pocket? There must be a payroll. No matter how sketchy, there must be something that shows what you are paying out to third parties, to staff, so that you can be accountable to this business. This business must have a life of its own. You can't be dipping money into your left pocket and removing it from you with your right hand. You can't be, it's not going to add up at the end of the day. You are going to treat the business as a separate business entity so that you can be prudent. This is where prudence concept comes in, and the business entity concept. The business is a separate entity distinct from the owner of that business. This is key. Accountability to yourself is also very, very key. Accountability to the business is also very key. Now, when you are partnering with people and you have not cultivated the habit of keeping records, how do you partner with people when you can't keep records? How do you render accounts? How do you convince people that you actually need to inject money into your business when you have not been able to render accounts of what you yourself put into the business? So imagine somebody running a business for 2-3 years and wants Helen Emore to come and be a partner in the business, and you are not able to put before her a valuation of the business. How do you value a business where records are not kept? How do you value a business? How do I know how much 30% of your business is worth when you have not kept good business records? So it is important to keep daily records of your transactions, monthly records, quarterly records, half-yearly records, so that you can also measure your performance against your expectation. When I was setting up, what did I plan to achieve? What have I achieved? What kind of profit did I say that this business should be bringing? What is the actual profit that the business is bringing? So you can do some sort of post-mortem. Where am I getting it wrong? What are the things I'm doing? Oh, I'm even exceeding my expectations. What am I doing right? And you keep doing it right. Oh, what are the things I need to fine-tune? What are the things I need to jettison to be able to keep this business afloat? So record keeping is the lifeline of any business. Record keeping is the lifeline of any business. Without it, no business can survive.
Now that you've talked about record keeping, there's another issue. You talked about valuation. How do you know how much?
Yes.
How does one link this with taxation? Because we complain that we are paying too much taxes. Does it have to do with how we keep our records or how we manage our finances? Is there a correlation? How does those two tie together? Talking about the multiple taxation and the way we keep our records and structure our finances.
Thank you very much. That's a very charming question in this environment now. A lot of people don't keep good records, so they find it difficult to convince the taxman that the taxman is about to strangle life out of them. Now, if you claim you are not making profits in a business, so you are not expected to pay taxes, income taxes, but you are not able to justify or support with valid records of your business expenses, definitely the taxman is not going to agree with you that you have made a loss. The taxman is going to assume that you are hiding behind a finger so that you can escape paying the bona fide taxes. That's one way to look at it. Now, another way to look at it is this. Two things are very certain in life. Ask me what those two things are.
What are they?
Death and taxes. It is certain that one day you will die. We will all die. And it's also certain that while you are alive, you will pay
You must
taxes.
pay taxes.
Those are the two things that are certain in life. Every other thing you can run away from. You may not even be born. You may not even be born anyway. But once you come to
we understand the importance of taxation and how our operations affect our tax liabilities. Do we understand it enough? You know.
Now, the truth about it is this: if you keep good records, your records will show your level of profitability. Your level will show your records will show your level of tax exposure. Let me give you an instance. You are supposed to pay rent for your office premises, and you are expected to deduct withholding tax before paying the rent. But because you think the government is not doing anything for you, you're not benefiting anything from the government, you skip the withholding tax and pay the rent to the landlord 100%. Whose liability is it? It is your liability, because the tax authorities takes you as its agent in the collection of these taxes. It's not going to be a valid excuse that what has the government done for me, that I'm going to be helping government to collect taxes. So our understanding of the tax laws also matters. There are things you are meant to do. There are records you are meant to keep. If you are rendering a vatable service and you are raising vatable invoices and you are not adding VAT to the supply of services and you are rendering vatable services, then the liability is yours. These are liabilities. The cost of non-compliance is about 500 times higher than the cost of compliance.
So how do we know how to comply? How does someone in the creative industry, whether it's marketing, media, production, how do they know how to comply to these taxation regulations? What should they be doing?
Now, the first thing that is important is that people in the creative industry should seek knowledge. What are the relevant taxes applicable for this service that I render? Let me give you an instance. I used an example of collaboration. I'm collaborating with Avant-Garde to deliver on a project. I'm collaborating with Pet Kese. I'm collaborating with Tall and Wide. I'm collaborating with Town Criers. When I'm going to pay those collaborators, the law requires me to deduct withholding tax from their fees, whatever I'm paying to them. A lot of people will tell you that, oh, it's third-party cost. You know, we find excuses to want to circumvent the law, and it boomerangs. If you don't understand the law, now there are two things: tax evasion, tax avoidance. Tax evasion is criminal and is punishable under the law. Tax avoidance is understanding the rudiments of the law and applying it to your advantage. You may not have this expertise in-house, or you may not, as a marketing communications person, you may not know all about tax avoidance, but you can ask questions. You can ask the forebearers in the business. You can ask people that are doing similar businesses, or find a consultant that will not, cut off your head. You know what I mean? Find a consultant
much money.
that will not charge you too much money to find out, oh, what are third-party costs? What am I supposed to apply VAT to? What am I supposed to deduct? What is the level of PAYE that I must pay my staff? What is the that I must pay to government? What should I deduct? Find a lot of people in businesses, they don't pay taxes because they think it's neither here nor there. I mean, and when the consequences come, the cost of non-compliance far, far outweighs the cost of compliance. So every practitioner must be careful in seeking knowledge and understanding all the applicable taxes to the business, because two things are constant, remember: death and taxes.
Thank you very much, Mr.
Yes.
Badejo. Just to wrap up quickly, I'd like you to just give me some specifics now. What are some of the kind of records that people should keep, and what should they be doing to manage the financial health of their business? What are some specific records they should be keeping, and how should they manage the financial health of their business? Those are my last two questions.
That's very good. Now, you need to know two basic equations. They are very simple equations, very simple, not complicated. Revenue minus direct costs is equal to your margin. Revenue, what you charge your client, minus what it costs you to deliver your service, is your margin. This margin is the same thing as gross profit. Now, when you take your gross profit and take away all your indirect costs, like salaries, PHCN, diesel for generator, all those indirect costs.
Data?
Yes, data. So your gross profit enables you to meet up all those indirect costs. Then you now have a net profit. So you must keep records of your revenue. You must keep records of your direct costs. You must keep records of what profit margin, what gross profit margin you are making. You must keep records of your indirect costs, data, diesel, all those costs. And then you must be able to determine what your profit is. Because without correctly identifying what your profit is, no business can grow. And if you are making consistent losses, it means that business is going down the drain.
Yes.
You need to be a going concern by consistently making profits. And you must keep records. So record your revenue and record it. Make sure they are completely, correctly, and accurately recorded. You must keep records of all your costs to determine your gross profit. And your gross profit is what you are going to use to meet up all your indirect costs to be able to arrive at your profit. If you miss out any of this, you are going to come up with a distorted financial statement. If you miss out, or you are not adequately accounting for any of these components, you are not even going to be able to operate competitively in the market. You are not going to be able to determine, am I charging the right fees? Am I undercutting myself? Am I competitive in my industry? What are others doing? What is the cost of a pack of Omo compared to the cost of a pack of another detergent? I'm trying to use production as an example now. If it costs the producers of Omo to produce Omo at a cost of 20 naira per sachet, and it's costing you 25 naira to produce another detergent, you're already running in a manner that you're not able to compete in a market. It's like that in the service industry too. If a company is able to render service at a lower and a cheaper cost than you, then you are not in business. So everybody must strive for cost optimization. How do I manage my costs? You cannot manage what you have not recorded accurately. You cannot manage what you have not recorded accurately. So we must keep records to determine all the components of our costs, whether direct or indirect. We keep records of all our revenue to be able to know whether we are competitive or not. So basically, those are the basic records that must be kept. And for small business owners, do not be deceived to think you need to go and invest a lot of money to keep these records. you keep basic records that enable you to bring out information that will help your business. And as your business grows, you can invest in IT. You can actually buy software that can do a whole lot of things for you. You don't have to put 4 people in your accounts department today. You can have one person, and once you're able to keep your record, the computer does the rest for you. There are IT programs that will generate all the information you want under the sun. But if you put in garbage, you're going to get garbage. You cannot make important financial decisions if the quality of your record keeping is below par. Thank you.
Thank you very much. Thank you so much. Finally, I talked about managing financial health.
Yes.
Of the business. What should you be looking out for to manage the financial health of the business?
Yes. Now, the financial health of the business is all about how to manage your cash flow. If you run a 1 million naira business and you're able to manage your cash flow in a manner that you are able to manage your supply chain, creditors are not holding you to ransom. You know, in every business, there are stakeholders. Managing the financial health of a business is akin to managing your stakeholders. You are able to manage your cash flow to the extent that you're able to meet your costs. You're able to manage your supply chain, the flow of your supply chain, so you don't hold your customers to ransom. You're able to pay salaries as and when due. You're able to pay taxes as and when due. If you have shareholders, you're able to pay your shareholders their benefit as and when due. If you have collaborators, you're able to settle their bills as they fall due. You're in business. Cash flow management is the lifeline. Cash is king. If you run a 1 billion naira business and you're not able to manage your cash, at the end of the day, you may discover that rather than having surpluses, you're having deficits. So, managing cash flow determines the financial health of an organization. Once you're able to manage your cash flow, you then will be able to do your stakeholders management in a manner that you optimize. For instance, you have shareholders, you have not paid dividend for 4 years, and you suddenly break into a new business that requires your shareholders to inject funds. How are you going to convince someone like me and you, Helen, to bring in money when you have not seen anything for 4 years?
At all. There will be nothing at all. It's not a
Meanwhile, the MD of this creative agency is junketing all over the world. He's wearing the best suit.
Flying business class.
Flying business class.
I'm posting it on Instagram.
I post it. and then he needs to inject. And this is serious business.
Yes.
The man has just had an inroad into Nigerian bottling company. And is coming to come and tell stories. So the financial health of a business is just about stakeholders management, cash flow management. Once you get it right, there could be hiccups, but something that has to do with corporate governance enables people to even know when you are going to have a problem, even before the problem arises.
Yes, true.
And then they're able to, 2-3 good heads are better than one. People are going to advise you, give you the advice up front and say the way you are going, this is where this business is going to end. So do 1, 2, 3 things to ensure that when the time comes, you are able to weather the storm. So the financial health of a business is all about good corporate governance culture, good stakeholders management, and good cash flow management. You can't get it wrong.
Thank you very much, Sir Badejo. Listening to you, you are sounding like a faultless guru. I don't imagine that you have challenges in your business. I don't imagine that you've had some failings in the business. It sounds like you've just had a very good and cautious business path over the years. Is that correct?
Yeah, I've paid my dues and I've learned from all the mistakes I've made in the past. So I can talk confidently because I've paid for some of the lessons I've had to learn over the years. And then, who is your teacher? They say experience is the best teacher. You know, experience is the best teacher. So it's a continuous learning process. It's a continuous learning process. All that you have seen all over the years ensures that you can avoid. There are some avoidable mistakes. There are some mistakes you will not make because of the benefit of experience. And I've been doing this now for 36 years. So there are things that will come naturally, except this pandemic.
Thank you very much, Sir Badejo, for your time. I greatly appreciate this. Thank you. And
Thank
if
you very
we
much.
need to, we'll call you back for another session. Thank you.
Thank you very much.